When I explain that Bitcoin is going to millions and eventually tens of millions of dollars a coin, people equate that with high risk. Oh, look, well, you just think Bitcoin's going to millions of dollars because it's so volatile and volatility is risky and Bitcoin is a high risk play. But in today's video, I'm going to explain why I don't actually believe that to be the case. I actually think that Bitcoin is lower risk than most investments, if not all other investments out there, because Bitcoin in of itself is not an investment. It is a form of savings for a different system that I think is rapidly accelerating towards us. I'm not the only person to say this, by the way. Michael SAYLOR has a clip that's been making the rounds online in the last few days, preaching this same kind of thing. So we're going to be talking about volatility, and also we're going to be talking about how you can leverage that volatility and make the most of that volatility with arbitrage to get as much Bitcoin as possible with the least amount of risk as possible. So let's dive in here. Volatility is typically described or is typically understood as a function of risk, right? If something is more volatile, that means it's higher risk, right? But I would argue that's actually not the case, right? We know this is true because most people in traditional finance, Bitcoin aside, save for the long term in mutual funds or stock indexes, right? Why do you save in the stock market, which is more volatile than dollars? It's because volatility is not the only form of risk. You have volatility risk, duration risk, purchasing power risk, right? You have all kinds of risks. If volatility was the only sign of a high risk system, well, then you wouldn't be saving your finances in a stock market, right? You'd be saving it in cash because cash is king and cash is not volatile, quote unquote, right? So volatility is not the only kind of risk, right? The way I put it in this post here is that volatility is typically equated as inherently high risk. However, that is on the assumption that where you are standing is stable. And that is the key thing to understand here, right? If you are standing in a system of volatility, then everything in the world is going to look really, really volatile, right? It's like standing on a ship and saying that a mountain is volatile, right? Imagine that you're somebody on a ship, especially, a small ship, right? And you're looking out at the land, right? Looking through a telescope. And, the guy next to you says, oh, I was just looking at that mountain. Look at how volatile that mountain is. That mountain is high risk. Or actually, no, what you're standing on is a ship, and the waves of the ocean are having your ship look volatile, right? So if you're standing on the ship, it is false to say that the system we're standing on is the most stable, because that tree is really volatile, that mountain's really volatile, and that ship over there is really volatile. Like, it's just your frame of reference is what is biasing you to think that everything else in the world is high risk. And I would argue it's the same kind of concept with Bitcoin and dollars. A lot of people don't really think about this from a first principles perspective, but that's essentially what's happening. People in Bitcoin world, the Bitcoin maxis with the Bitcoin hoodies in our little tiny corner cult area of the internet, right? We look at the dollars and we say the dollars are really volatile. The people in the dollar world, which is 99.9% of the world, they look at Bitcoin and they say, well, Bitcoin's higher risk, right? The Venezuelan bolivar is higher risk than the dollar because it's more volatile. The peso is higher risk, the euro, the yuan, right? All these other currencies are less volatile, or more volatile than the dollar, and Bitcoin is too. So then inherently the bolivar and the peso and Bitcoin are all the same, right? And they should be over here, right? But I would argue that's just fundamentally not true because everything is its own kind of ship, right? Bitcoin is its own ship sailing on the high seas. Dollars are its own ship. So are the pesos, so are the euros, so are the yuan in the end, right? Every currency in the world is its own ship floating around. And so, of course, inherently, volatility is going to happen. The only question is, are you on a ship that is sinking down into the ocean, or are you on a ship that's not sinking, but you're looking at another ship that is sinking, right? Frame of reference is everything when trying to understand what is high and low risk. High risk or low risk in terms of what? That is the key critical question. So if we talk about instead the volatility of price, but we talk about more importantly the volatility of the underlying system, that's where volatility and the importance of understanding volatility really shine. Of course, if you look from boat A to boat B, there's going to be volatility either way, no matter which direction you look. The only question is the long-term trajectory of that vessel. Is this vessel going to have a volatile spiral down, sinking into the ocean, and then going to hit the ocean floor in the next 30 minutes? Or is this ship going to keep sailing across the ocean, right? That is the question. Not volatility in price, but volatility and the underlying security and stability of the system. Traditional finance says volatility is risk, and I agree. It sure is, but not price risk. We're talking about stability of the system. This picture you're looking at here is the federal funds rate and predictions of it over time. The deep dark blue line is what actually happened, and all the other colored lines, the reds, the light blues, the greens, the yellows, all those lines are different predictions of what the Federal Reserve is going to do. And this is the most important price on the planet, the most important price on the whole planet. It's not the price of oil, it's not even the price of housing. The most important price on the planet is the price of money, the price of credit. Because if you can manipulate and change the price of credit, you can manipulate and change the price of anything in the world. And so what we're seeing here is that most of these predictions have been totally wrong, right? If we look throughout the entirety of the 21st century so far, the first quarter of this century from 2000 to 2025, what we see is that there were a lot of predictions, both higher and lower, most typically higher, but the Federal Reserve has to keep manipulating these rates, right? And this is the underlying problem here, is that the entire political currency system of the US dollar is based upon humans, it's based upon banking institutions, it's based upon, financiers, bankers, presidents, economists, lawyers. It's based on these people controlling the system, right? And yes, I would absolutely argue that there is no second best fiat compared to the US dollar, right? Every other fiat currency is inherently worse than the US dollar. Why? Because every other board of humans is less trustworthy than the American board of humans that controls the US dollar, right? As much as I may not trust the Treasury or Federal Reserve of the United States, I trust the People's Bank of China, right? The PBOC, I trust them a lot less than I trust the Federal Reserve, right? I trust North Korea a lot less than I trust the American government. I trust the European governments a lot less than I trust the American government, right? And so the reason people flock to US dollars, the reason they flock to US bonds, US currency, is because the US dollar is the least volatile system in relation to all the other systems out there, right? It is the one ship that is sinking slower than all the other ships that are sinking much faster, right? But if we compare it to Bitcoin, right, what is better? What is infinitely better than having a system with more trustworthy humans? The infinitely better system is having a system that doesn't require human oversight at all. Bitcoin is just code. It's openly available on the internet. It's magic internet money that anybody can copy and paste an infinite number of times, right? There can be an endless number of new nodes out there running Bitcoin Core, running Bitcoin software, right? But ultimately, you don't have to have a more trustworthy Jerome Powell. You can just not have a Jerome Powell. You don't need a more trustworthy president. You just don't have a president. You don't need to have a more trustworthy and stable change to the rate of monetary policy, the rate of interest rates. You can just not have that. You can just have it be perfectly predictable, right? It's comparing, you have most of the ships in the world sinking in the course of hours or days, right? Then you have the giant Titanic of a ship that is the US dollar that sinks over the course of months or years because it has a tiny little hole in its hull, right? All the other ships are massive ships and have massive gashes in their sides, right? The giant Titanic of a ship that's the US dollar has a hole the size of a dime. And so it's still sinking, albeit at 100 times slower than all the other currencies. But Bitcoin, because it doesn't rely on human beings, it is the least volatile system, the most stable system, right? You can try to attack it, you can try to kill it. It will do nothing other than just continue to survive. It's the ship that doesn't have a hole in its hull, not even the size of a dime. It will just keep floating. It will keep being stable, right? So I would encourage you, if you're concerned about Bitcoin volatility, or if you hear people like myself saying, Bitcoin's going to millions of dollars, it's not because we believe, Bitcoin's the high risk bet. You got to speculate in to get rich. It's like, no, Bitcoin is the lower risk system that isn't going to sink as fast. So that's why our ship is going up forever in terms of your ship, which is the US dollar. It's not because our ship is higher risk than yours and we're going up to the moon, right? That makes no sense. It's like a levitating, sea vessel that becomes a rocket ship. That makes no sense. All we're saying is that the dollar is going to decline forever in terms of Bitcoin. And all the other assets of the world will get dragged into that as well, right? Bitcoin's system doesn't rely on elections, human interference, new issuance of tokens, or geopolitical risks. The dollar has to have exponential increase of dollars, okay? The dollar is a debt-based system, okay? And to pay that debt, we need more dollars than are currently in existence. The dollar is guaranteed to debase, right? This Titanic is guaranteed to sink because we need more dollars that are in existence to pay the debts we already have. We must print more dollars, and the prices of everything are going to continue to go up forever. If you're on a ship that's sinking to the bottom of the ocean, every mountain, every tree, every other boat is going to look like it's ascending upwards forever. That's not actually what's happening. You're just sinking. Likewise, real estate, oil, gold, and Bitcoin, and everything else in the world is going to keep ascending in price. But not because it's magically going up to the moon, but just because you're sinking. Real estate is not trending to infinity. The dollar is just trending towards zero. Gold, Bitcoin, these things are not trending to infinity. They're just trending towards zero in terms of dollars. So volatility of the system, not only volatility of price. However, let's talk about price a little bit. Michael Saylor has a quote, like I said, that's been making the rounds across the internet over the last few days. Let's hear what he has to say predicting a $10 million Bitcoin and why you should actually be embracing this volatility, not shying away from the volatility.
Volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich, that have all the money. If you're a 20-something or a 30-something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
And that's what people don't understand, is that a lot of people I talk to say, well, Bitcoin's too risky right now, but when Bitcoin grows and it becomes less volatile, then I'll start buying it. But what people don't understand is that the volatility of the system of the US dollar is only going to accelerate. And the faster the sinking ship of the US dollar continues to sink, the faster it's going to appear like Bitcoin just keeps ascending into the stratosphere, into the sky, right? Stocks, real estate, interest rates, and Bitcoin, in my opinion, are all going to get more and more volatile in terms of dollars. And so people that say, oh, well, I'm going to wait for Bitcoin to become less volatile, they don't understand you're pricing it in terms of a system that's going to become more volatile. And so if you think volatility and price is the only kind of risk that exists, well, actually, the more you believe, I'm going to wait to buy Bitcoin until it grows in size and becomes less volatile. Actually, you're dooming yourself, because you're going to be waiting longer and longer and longer, because the system will continue to destabilize and destabilize and destabilize. Now, what Michael Saylor predicted in this specific video clip was $10 million per Bitcoin. That's what he predicted. Now, I think over the course of the next 20 years, which is the time horizon he lays out here, we're going to at least triple the number of dollars in existence, right? I remember back in, for me, middle school, back when America had less than $10 trillion of debt. Now we have 35, 40, or whatever trillion dollars of debt. We're on our way to 50 trillion. We have a third of a quadrillion dollars of unfunded liabilities. So pretty soon we'll be at a third of a quadrillion. Probably over the course of the next 20 years, we're going to be knocking on the door of half a quadrillion, 2/3 of a quadrillion, maybe even a quadrillion dollars worth of unfunded liabilities. So I think it's very conservative to say that over the course of the next 2 decades, we're going to print at least 3 times more dollars than our existence right now. You know, maybe it'll take 10 years, maybe it'll take 50 years, I don't know. But let's assume, for the sake of example, that we only triple the number of dollars in existence. If we're going to triple the number of dollars in existence, going from $900 trillion of global assets to, close to $3 quadrillion worth of global assets, that would mean that a $10 million Bitcoin is going to be about 7% of global assets, going from $100,000 a coin at about 0.2% of global wealth to 100x, right? 100 grand to 10 million to 100x, going from 0.2% to 2% to 20% of global assets, and then diluting again, factoring in the number of currency units created, that gives us about a 6 to 7% global asset portfolio. So Michael Saylor, I think, could be totally right. Bitcoin could be $10 million in roughly 20 years, and Bitcoin would still be less than 10% of global assets. And I think at that period of time, Bitcoin's going to be way less volatile in relation to the rest of the global share of pie of assets, but it will be, if not as volatile, perhaps more volatile in terms of price than it is right now, right? In percentage terms, obviously nominal terms, right? Right now, Bitcoin moves a couple $1,000s, people freak out. When Bitcoin is $10 million, it'll move $500,000 in a day, and nobody will blink an eye, right? Like, quite literally, Bitcoin's entire price history so far over the first 15 years is going to be a couple hours worth of volatility 20 years from now in terms of absolute market cap. In terms of percentage-based moves, I think that returns will diminish when compared to the rest of global assets. But in terms of dollars, pricing in terms of dollars, I think that volatility may not go away. However, we are trending in that direction. Fidelity Digital Assets had a article a couple years ago in 2023, and this is what they said within that article or that report. Bitcoin is currently less volatile than 33 stocks in the S&P 500. And as recently as late 2023, there were 92 companies in the S&P 500 with stocks more volatile than Bitcoin. So when people say, oh, I don't want to buy Bitcoin because it's too high risk and it's too volatile, which in their mind is the same thing, the first thing to understand is that they're conflating the volatility of the system with the volatility of price. That's the first problem. The second problem is that because they don't understand that first problem, they're measuring Bitcoin in terms of dollars, and so actually Bitcoin is going to get more volatile in terms of dollars over time. But the third thing they're forgetting is that likely that same kind of person is investing in the S&P 500. And what they fail to realize is that anywhere between 10 to 20% of the stocks in the S&P 500 already are more volatile than Bitcoin in terms of price. And so obviously the counter to that would say, oh, well, yeah, but the S&P is more diversified. But I don't actually think it is, because Bitcoin is a total mixed basket of the entire globe in present and future. The S&P 500 is exposure to only 500 companies within a single country. I think Bitcoin is way more diversified than the S&P 500, because you're not only diversified to one country, but all the countries, not only one point in time, but all future points in time. And guess what? It's already, less volatile than a fifth of the S&P 500, right? And so where is this going in the long term, if we're thinking not in terms of months, but in terms of decades? Where this is going is that all stocks are going to either become less volatile or more volatile, right? If a stock becomes less volatile than Bitcoin, it's because that stock has trended to zero, right? Obviously, something that is dead, a dead fish lying on the ground, is not very volatile. It's not flopping around a lot, right? And so, many stocks will become less volatile than Bitcoin because they're trending towards irrelevance, right? A lot. That's where I think a lot of them are going. The only other stocks that are going to be left are ones that are more volatile than Bitcoin, because they're companies that are growing faster than the rate of Bitcoin, right? Just like MicroStrategy, Michael Saylor's company now rebranded as Strategy, right? And so a lot of people that are saying, oh, well, Bitcoin's less volatile than stocks. So number one, you're misunderstanding volatility of price versus volatility of risk. Number two, you're missing the fact that actually 10 to 20% of stocks in the very fund that you own are more volatile than Bitcoin. And number three, there will be a point in time where Bitcoin is less volatile than all the stocks you own, because those stocks will be higher risk than Bitcoin. And that will be properly understood at that point in the future. And so a lot of people just don't fundamentally understand what's going on here. So Bitcoin turns from, when does this all happen? Bitcoin goes from a risk on to a risk off trade when the majority of people understand what I'm sharing in this video here, right? When the majority of currency is volatile, the last thing you want to own is an asset that is not volatile, right? If you're on a sinking ship, the last thing you want to do is pursue stability, right? Because the ship is sinking. You want to pursue volatility that can account for the volatility that's collapsing your system, right? This is why people are not wanting to go to bonds as much anymore, right? It's because if you believe in the long term, the volatility of the US dollar system is going to get higher and higher and higher. You don't want to be 30 years exposed at, massive leverage long at the long-term survivability of that system, right? And this is where I think we're going. This is Wicked Smart's chart. This is a couple years old now. He posted this in October of 2022, if I can zoom in there, right? And so what I think we're going to see is Bitcoin was exceedingly volatile in its very early days when it's going from nothing to something. And now we're going to see volatility diminish in terms of dollars. But at some point in the future, the volatility of the system of dollars is eventually going to catch up with Bitcoin, and volatility will return not only in real terms, but also in terms of purchasing power, or in terms of nominally, right? In terms of the absolute price, right? I think we're going to see that. I think the next 5 to 10 years may be some of the least volatile years we ever see in Bitcoin when priced in terms of dollars. I think the 2040s and 2050s may be way more volatile than the 2020s and 2030s when it comes to pricing Bitcoin in terms of dollars, right? Obviously, I don't think the dollar is going anywhere anytime soon. There's well over 100 other countries out there with currencies way weaker or way less stable than the dollar. But eventually, when people understand, hey, the year's now 2045, Bitcoin's $10 million a coin, it's now 7% of global assets. Why am I still holding on to the dollar, right? Like, the dollar is like one of the 8 currencies left in the world with any substantial value, any substantial market cap. Well, why don't I just increase my exposure to Bitcoin? Because I think over the next 30 years, which currency system has a longer chance of surviving? Which ship do I think has a longer chance of floating? Well, I think Bitcoin does, right? Bitcoin's been around since 2009. It's coming up on its 40th anniversary here. It's 7% of global assets, 10 million bucks a coin. I remember when I first heard about it in, 2025 when that Luke Broyles kid in the orange hoodie was begging me to buy it because he viewed Bitcoin as low risk, and I laughed at him and made fun of him. I had all kinds of nasty comments down below in the comment section because I was not thinking straight. And people are going to begin exiting dollars when they realize actually Bitcoin has a longer viability here, right? We're just not at that point yet. I do think that's coming. And the point at which Bitcoin does hyper-Bitcoinize the world and take over all the dollars is when people understand what we're talking about here, that the currency, dollars, is volatile. And so the last thing you want to own is a long-term stability of dollars, which is bonds. Sell the bonds and buy the Bitcoin, right? And we're seeing this already in a microcosm. Bitcoin's way less than 1/3% of global wealth still, but we're already seeing it being highly correlated with global liquidity, right? A lot of people have been posting charts similar to one on the screen here about how global M2, which is the global supply of money, right? That as the global amount of currency in existence goes up, Bitcoin goes up, right? Now, for the last almost 3 years, we've had a flat number in M2, right? This chart here we're looking at is only over the last couple of months, but if we look at the last few years, global M2 is actually relatively flat since 2022, right? As banks have been having more quantitative tightening and lessening number of currency units in existence. But yet Bitcoin is still increased by a factor of 4. And just in the last week or so, we've seen global M2 for the first time in years spike above into all new time highs, right? Since global M2 has been making its first all-time high in years, the sponge of Bitcoin, in my opinion, is primed for the next USD expansion, or excuse me, I should say USD supply expansion, not price expansion, but the point still remains. Bitcoin could go lower, right? We could go significantly lower than where we are here, right? If the tariffs get really bad or the recessions get really bad or whatever, sure, I think we could totally see Bitcoin in $70,000, $60,000 or $50,000 again. However, Bitcoin did a 4x in quantitative tightening over the last 2 or 3 years here. Why would Bitcoin not just continue to go up as we see global M2 expansion? And this is why a lot of people, I think, are too bearish on Bitcoin. A lot of people say, yeah, well, I could see Bitcoin going to $120,000, $130,000, $150,000. And maybe you're right. Sure, Bitcoin was $109,000 at its last high. So if it hits $109,000 again, 130 seems pretty reasonable. Makes perfect sense to me. But the problem is that what if between now and then we print a bunch more dollars? Maybe $130,000 in the first half of 2025 is not $130,000 in the second half of 2025, right? Maybe we print so much new money by the end of 2025 or into early 2026 that $130,000, $150,000 is no longer $130,000, $150,000. Even if you believe Bitcoin is going to have diminishing returns this cycle and we quote unquote only get to 150 grand, well, by the time we get there, if we just print another 20% more dollars, what prevents us from going to 200? Or maybe you think that Bitcoin's going to $200,000. What prevents it from going to 300,000, right? It's because this whole cycle theory, this whole 4-year cycle theory, I think is going to get harder and harder to trade. Because sure, maybe Bitcoin has a 50% correction in real terms, but if we print 20% more dollars over the course of that correction, or those 20% of dollars that were printed before, lubricate the system and get throughout the entire world, well, just because something falls in real terms doesn't mean it's going to fall in nominal terms. And so this is what we see. Bitcoin is the ship absorbing all the passengers from all the other ships that are tired of the volatility of that system. And so, of course, the ship of the RMS Bitcoin is exceedingly volatile, but that's because everything else is a volatile system in relation to it, right? And so I know I've kind of beat this metaphor of a dead horse, but, to give a specific example of a specific ship that sank, let's talk about the Titanic. When the Titanic is sound, when the ship itself is sound, of course, a ship made of iron is more stable than a ship made out of flimsy, pine or balsa wood or whatever, floating in the middle of the ocean, right? Obviously, objectively, if you're in the Atlantic, you want to be sitting on a massive iron ship instead of a tiny little wooden boat that's not going to sail more than 100 miles before it capsizes or whatever, right? Obviously. However, that is on the assumption that the iron ship is stable. If the iron ship is not stable and its sinking is inevitable and a mathematical certainty, well, obviously you want the more volatile boat. Obviously you want the smaller boat, the boat that is more sound. A large, massive ship that sinking is inevitable is way higher risk than a small, tiny ship. The probability of that ship sinking is way lower, right? Lifeboats are way higher risk if your assumption is correct that the Titanic is not going to sink. However, if your assumption is wrong and the Titanic is going to sink, all of a sudden, lifeboats may still appear more volatile. They may still, bob in the water much higher than the Titanic is, even though the Titanic is slowly sinking, right? But make no mistake, the long-term future of the Titanic is way more volatile than that of the lifeboat. Maybe the lifeboat snaps in half and we all sink and drown in the ocean, but we know the Titanic's going to do that, right? And so my whole point in this is that when people respond to me or they comment in the videos or they ask questions, people look perplexed when I say Bitcoin's lower risk, is because this is why. When people say, oh, but Luke, that makes no sense. How could Bitcoin that you're claiming to have the highest upside, how can it be the lowest risk? Well, because it's a new system. It's not within the current system of dollars, right? But it's an entirely new thing. And the dollar system, along with all the other assets with it, are going to get drugged down in terms of Bitcoin. And so I continue to believe that Bitcoin is not only the highest upside investment, quote unquote investment, that you could possibly make, but also I do believe Bitcoin in the right time horizon is the lowest risk asset. I think 100 years from now, Bitcoin's a lower risk investment than any given piece of real estate you could possibly buy. I think Bitcoin's a lower risk investment 100 years from now than, a bucket full of fish or a barrel of oil or, a pound of gold or whatever you have, right? I think if our time horizon is 10 years, 20 years, 50 years, let alone more than 50 years, I think Bitcoin is the lowest risk asset. The farther out in time you go, the higher probability that at this point in time, the Titanic is going to sink. So for volatility as a share of global assets, like I said earlier, I do believe that we will see diminishing returns, right? Obviously, going from 0% to 1% of global assets is more volatile than going from 1 to 10 or from 10 to 100. But in terms of U.S. political currency units, dollars, I think there is no such thing as diminishing returns. So we're going to see the dollar price of Bitcoin get more volatile as it grows in size and as the system of dollars continues to decline, right? Bitcoin is already stable for people like you and me that are not pricing Bitcoin in terms of dollars, but pricing Bitcoin in terms of its share of global assets, right? And in pricing it in terms of within the network. It's already the most stable thing we have. Bitcoin is the most stable thing within the network we know of, right? But eventually, nobody will be pricing Bitcoin in terms of dollars because it'll be nonsensical, right? Nobody prices the Venezuelan stock market in terms of Venezuelan bolivars because everyone just knows, well, obviously that's cheating because the Venezuelan bolivar, like the stock market in Venezuela is only the best performing stock market in the world because the bolivars fallen so much. Well, obviously, Luke. Well, yeah, it's going to be the same thing with US dollars. At some point, the US stock market is going to go up and up and up more and more volatile, right? Same thing with Bitcoin. But, oh yeah, Luke, you can't be pricing Bitcoin and the stock market in terms of dollars. That's just cheating. The stock market is only up 3x because we printed twice as many dollars in the last 2 years, right? It's going to be the same thing. Eventually, the US dollar will go the way of the bolivar. It might take 50 years, maybe even 100 years, but eventually that's the direction where it's going. I don't know when the Titanic's going to sink, right? It may take 2 hours, it may take 2 days, but I do know, whatever the case, I want to be in the lifeboat because I may not be sure about the lifeboat's survivability, but I am sure that everybody's going to want to see on that boat, and we're going to go there, right? And so this chart we see on the screen here is exactly what we're talking about. The blue line is the price of Bitcoin in a logarithmic scale. The green line is the price of the US S&P 500, the US stock market, right? You can see on a logarithmic scale, it is nowhere nearly as competitive as to Bitcoin. A lot of people would say, oh, well, that's because Bitcoin's high risk. But actually, if you're looking at it on a log scale, Bitcoin doesn't look like a bubble that keeps coming back and dying. Bitcoin looks like an adoption curve, or the first part of some sort of S-curve or mass adoption curve, right? And if we price the two in terms of each other, what we see is the red line. If you're pricing the S&P 500 in terms of Bitcoin, what you see is that red line where, hey, actually what it kind of looks like is not that the S&P 500 is going up. Sure, it's going up in terms of dollars, which is a sinking ship, but it looks like the S&P 500 is going down in terms of Bitcoin because Bitcoin is the more diversified index of the world's productivity, not only the present, but of the future, right? We're not limiting it to only a share of American corporate paper. We have the whole world for all future time. The S&P 500 is going up forever in terms of dollars because the ship of dollars are sinking faster than the ship of the S&P 500. But the S&P 500, it's still trending to the ultimate same destination as dollars. Dollars are trending towards zero against Bitcoin. Eventually, they will hit zero. The S&P 500 may never hit zero against Bitcoin, but it's going to trend towards zero indefinitely, in my opinion, right? Now, with all that said, there's a great opportunity here when it comes to potentially arbitraging this trade, okay? For those of you that don't know, I work at the Bitcoin Advisor, and it's what I love to do. It's what I love to do even more than making videos is getting to know people, talking about their plans. I was just on the phone with one of them who's looking to retire in the next couple of years here, right? So that's, for me, what I really love to do. And this has, everything I've shared in this video so far has much less to do with the number of dollars or ones and zeros they own and much more to do about mindset. I have clients at the Bitcoin Advisor that have literally hundreds of Bitcoin. Others have tens of Bitcoin, others have 1 or 2 coins, and some of them have less than a Bitcoin, right? But no matter what their net worth range is, all of them have the same long-term view. And it's very funny to me that, it's all about the mindset when it comes to this wealth preservation. And all of them, no matter if they have hundreds of Bitcoin or a hundredth of a Bitcoin, all of them are going to end up with more dollars 20 years from now than the people that are hoarding dollars or holding S&P 500, right? Like, doesn't matter how much Bitcoin you have. You could have hundreds of Bitcoin. You could have 2 Bitcoin or half a Bitcoin. And whatever the case, eventually at some point in time, you are going to have more dollars than anybody else in the world right now because you have the asset that's trending up infinitely closer towards infinity than people that are holding the dollars, right? So the amount is much less important than the mindset. And that's what I'm trying to clarify here. That's, for me, the really fun thing and why I don't care, what kind of net worth the person has. Like, the goal is all the same. Increase your Bitcoin stack and reduce your risk when it comes to it, right? Like I just said, for almost all of them, they already view Bitcoin as the less volatile asset because they've changed their perspective of where they're standing. These people understand in the same way long-term fixed rate debt is ideal for real estate, right? And the yield of that real estate, the rental income pays for that debt, right? It's the same kind of concept with Bitcoin. Bitcoin goes up indefinitely in terms of everything else because everything else continues to be sold off for Bitcoin because Bitcoin is the real hurdle rate. Bitcoin is the yield of productivity of the human race, right? And so the number one focus I would encourage you to do, the number one focus I encourage everybody to do is to understand your main risk in Bitcoin is not the volatility. Your main risk in Bitcoin is not the price going up or down a couple percent, right? Your main risk in Bitcoin is the underlying bearer risk. Your main risk in Bitcoin is losing what you have. Your main risk of exiting the Titanic and going to the lifeboat is not the risk of, what if the lifeboat, jumps up because a wave hit it, right? Or what if the lifeboat falls down off the wave, right? It's like, that doesn't matter. The underlying thing that does matter is making sure that you secure your spot on the lifeboat and that you don't fall out of the ship, right? And the same thing is true with Bitcoin. Your biggest risk in Bitcoin is losing the Bitcoin. A 20% fall in Bitcoin price is a nothing burger, but losing 20% of your stack because you made some silly mistake, that's a big loss, right? And so the number one focus that myself and all my clients have is to reduce their risk. The faster you reduce your risk, the more favorable you become for institutions that are going to be willing to give you different products and services to make more money, make more Bitcoin, and increase your quality of living, right? The way to become the most favorable for the coming wave institutions is to become the most stable person in the rise, right? The institution cares about, is this client, is this borrower going to be more volatile or less volatile, right? And the way to ensure that is to have, number one, more Bitcoin. Number two, a longer term time horizon. Number three, the proper legal, custody, and tax havens for that Bitcoin, right? If you can do those things and verify that, that's where you're going to be most attractive. What I personally believe is the long-term future here is that long-term fixed rate debt, just like real estate, is coming, and it's coming for Bitcoin. And it's going to enable large swaths of hodlers with long-term vision, like Michael Saylor, to dramatically increase their Bitcoin stack sizes without counterparty risk, without margin call, or without single points of failure, right? If you can go to somebody and say, hey, I've got all this Bitcoin, can you lend me, whatever, X number of dollars to buy more Bitcoin, and we can then put it in this new multi-jurisdictional vault that's escrow compatible. Maybe we do some time locker with it. I don't know. They're going to be willing to give you the free capital because where do most of the dollars live? Most of the dollars live in the future because most of the dollars that everybody knows are going to be produced in the future, right? People with Bitcoin on Coinbase aren't going to be given the ideal pristine options. People in self-custody, in multi-sig, multi-jurisdictional multi-sig with 0 point of failure, those people are going to be given the best options and the soonest, in my opinion, right? The more of a pristine asset Bitcoin somebody holds, and the more pristine the security of that Bitcoin, the sooner the ideal offers are going to come to market, and the sooner those people are going to have advantage to this, right? Trading volatility, trying to trade the Bitcoin cycles, I'm going to sell at the top and buy at the low, I don't think that's a very wise plan because I think, sure, the 4-year cycle may be slowly on its way out, but that doesn't mean volatility is going away. It's going to be very volatile, going from 100 grand to 10 million and eventually to 100 million, right? And like I've been saying throughout this entire video, I think volatility is going to dramatically go up. I think it's going to go up dramatically because the dollar is going to dramatically decline. So I think trying to trade back and forth between dollars and Bitcoin is like trying to trade back and forth between the lifeboat and the Titanic. Like, sure, that may work for a while, but it's going to get higher risk every single time you do it because the probability of other people understanding that the Titanic is going to go up, right? So I don't think it's a proper long-term strategy. But what you want to do in the long term is continually short the Titanic and go long on lifeboats, right? Multi-decade planning is the fastest and safest way to sleep better at night while increasing your stack. Okay, if you're somebody out there, no matter if you have 100 Bitcoin or if you're trying to get to half a Bitcoin, no matter where you are in your journey, it is not too late to start buying Bitcoin. It is not too late to have a discussion around self-custody. It is not too late to upgrade your personal self-custody setup. Yes, number one, to lower your risk and lower the probability of losing the Bitcoin. Absolutely. But number two, to get earlier access to different kinds of loan products rapidly accelerating towards us, right? Products are not going to be available for everybody overnight. This should be obvious. Who are they going to be available for? They're going to be available for people with the most Bitcoin possible, as well as the people with the highest security possible, right? Those are the people that are going to get preferential treatment when it comes to these kinds of products. So if you want to have a discussion like this picture on the screen here, there are videos I'm working on trying to explain this. The videos aren't public yet. I'm trying to explain these kinds of concepts to, the clients I have, but if you want to have a conversation about what it looks like to increase your Bitcoin stack, to decrease your risk, and ultimately what the future products are coming down the line, lending products, insurance products, all kinds of other things, you know how to get a hold of me. You have my phone number, you have my email. I'm doing everything I possibly can to keep up with the interest, but whatever the case, the important message to understand here is that yes, Bitcoin is going to be volatile, especially in terms of dollars, because dollars are trending to zero and Bitcoin is trending up indefinitely. And so a lot of people are going to continue to say, oh, Bitcoin's never going to $10 million, or, oh, Bitcoin is too high risk, it's too volatile, right? A lot of people are going to continue to have these knee-jerk reactions. And ultimately, there is risk in volatility. But ultimately, the volatility of the underlying system is way more important than the volatility in the price. If you enjoyed this video, please like, comment, subscribe, do all that wonderful stuff. I'll see you next time. Hello, it is I, Luke, in the middle of a cornfield. Now, you probably don't want to travel to come to a cornfield, but what you should definitely check out is Bitcoin Alaska, coming up here in this late June, early July of 2025. It's in Juneau, Alaska, an absolutely beautiful place. I've not been there before, but I'm really looking forward to this. I've got 3 bedrooms left, three spots available left. It's going to be about 8 days, all kinds of outdoor nature activities for the nature-minded people such as myself. Kayaking, hiking, canoeing, tours, whale tours, dolphins, lighthouses potentially, glaciers, eagles, all kinds of awesome stuff you're going to see that's, kind of like the stuff you can only see in Alaska. And then, of course, there's a conference. There's a first ever Bitcoin conference going on in Juneau, Alaska. It's going to be a pretty exciting event. 200 to 300 people are going to be attending the event. Awesome speakers are coming, such as Alex Gladstein of the Human Rights Foundation, Lisa Huff, Adam O'Brien, and about a dozen more speakers, which I don't have time to get to in this video. The whole cost for the trip is going to be a few $1,000s. If you want to join, highly encourage you to reach out because they're going to sell out our tickets pretty soon, I think. And then, of course, like I said, I've got 3 spots left if you want to join for the whole week-long excursion of making memories in nature, being able to say, hey, I was there first for the first annual Bitcoin conference there. And it's going to be a really fun time. Cornfields are nice at certain times, but I think this is going to be a week of memories. So if you have any interest, reach out to the phone number on the screen. Let's have a conversation, get you booked in as soon as possible, and I hope to see you there. Thanks.